We were attempting to do longs last, I believe it was last Friday. They didn't. They broke out a bit higher, and we were able to just accumulate small profits and close out. We never carry the stocks across the end of the week. Today we will simply be doing the same trade again. We are going to take this to actually trade management on the weekly time frame, intra-week that is, so that we're able to do swing trades. And it's the same strategy. We will focus only on taking the swing trade. If we get the trigger and we take a swing trade, we can begin to maximize on the trade by doing intraday longs. Once we have triggers, of course, on the 5 and 15 minutes, and we have a confluence of rolling positive momentum. Let's check here if this is beginning to show, and of course, if it is beginning to show on the Tech 100, it is only a matter of time, hopefully, before it also shows on Bitcoin. So we have a cycle. Let's just investigate the momentum picture first, and then begin to consider the entry. Bear with us a second. We were expecting a trigger at resistance 1 and we're getting it, and by that time you have to have a hedge below dot 2 here. I believe this is called dot 2. We're not sure. Yeah, it's dot 2. All right, so this is the correct label. We have something like dot 1 and dot 2, dot 3, dot 4, dot 5. So we can just use higher degree 3. This is high degree 4, we're getting high degree 5. Now we'll take this to higher frames and check all the other momentum structures. But in reality, what we are really going to be doing is you have a 3, you have a 4, we're going to be getting a 5. We'll look at the internals very shortly. It could be, of course, a 4A, 4B, and 4C, not in this very small internals. So we believe we have a trigger. It's a 1 and a 2, 3, 4. We get a 5, then we get more corrections, but they will never break below level 4. They will never break below level 2. You're seeing some kind of micro inverted head and shoulder market moving higher. So the market here is a buy, just like this hour shows. 23,150. We are going to have a hedge at 23,000 to have a set and forget trade, 150 points to the downside. Let's see if we have positive feed out of the 3 minutes. Not really. They can't, of course, call this a positive feed. And but we have a cycle extreme on the 3 minutes. Let's just first check momentum cycle again before we take this to an update of our analysis. We are looking again at cycle extreme on the 5 minutes. So we have positivity on the 3 minutes. We have positivity on the 5 minutes. What about the 15? Beginning to see positivity also on the 15 minutes. All right, 30. So we have now confluence of positive momentum cycle. At this point, there will be no trigger. We don't need a trigger. We just, seriously, we need a tweezer formation is as good as a trigger. It's the actual raw price. And we have a trigger here on the 30 minutes. This is, of course, leg 4 trigger. So that means you really have a 3, 4, 4B, 4C, markets going up. We do the right entry. 22,000 market 160. You can get in maybe at 22,145. The hedge is to be safe. It can be below level 3, but to be safe, you want it here. 23,000. Let's take a look at all the other momentums. Excellent. I believe above 45 minutes, we're going to have very good traction. Let's take this to analysis then to understand the extent of the move and take the trade. Oh, but right now we take, that's us. We could be mistaken even before we go to analysis. we believe we are confirmed, we take the trade. Again, the market is a buy, 23,000, I'm sorry, 160. We are going to have a hedge at 23,050 if you wish. Again, entry 23,160, hedge 23,050. We are going to resistance one here at 22,300 and just 22,300. We have 22,274, 23,286, 22,300 is just above resistance one. We go for 23,300. All right, we'll just take 2-minute recess to stand out of background noise. When we're back, we are going to be continuing with the Tech 100, so please stay tuned. All right, I'm sure you're all aware of the longer and of the technical picture. If you find that you're a bit out of context, there is a recording of the technical picture on last week's session. I believe it was Tuesday. All right, let's take a look at where we left off and why I believe the market is going up. We believe the market is going up because this is, of course, a vice. 22,923 appears to be advancing, top of the vice. Market today is 23,000. What we're buying into right now, 23,150. So gradually, of course, moving to as high as 24,000, showing here. And this vice is what we're looking at here. So it goes to 24,000 inside of something like an ending diagonal. This is the structure which we get to segregate on the 45 minutes and on the 15 minutes. Even internal entries are related to breakout of B and C as the market advances into 5. The structure shows, of course, a dot 1 and dot 2, dot 3 at this point, a dot 4, 1 and a 2, 3, 4, we get a 5 to complete dot 5. Again, target is at least 24,000. At least really 24,000. Here showing 23,650. The same structure on the 45, and that's what we're going to be buying into today. This is today's 45, and this also is internal in today's 45. So you want to focus the segregation off of dot 3 and dot 4 because this is going to dot 5. This big letters here, dot 3, dot 4, dot 5. Let's take it back to this. Dot 3, dot 4, dot 5 isn't even showing. Let's take it here. So that dot 4 does, of course, a 1 and a 2, a 3, 4. We do a 5 into dot 5. Next chart, we're going to focus from 3, 4 going into 5. You'll get a 3, 4A, 4B, and 4C. Then you get to see the yellow labels 1, 2, 3, 4, 5 into 5. Now focus only on the 1, 2, of course, because this is a breakout. Forget about the 4A, 4B, 4C. It's done. Done deal. Focus on the 1, 2, 3, 4, 5. We're in the 3, so we should be very, very optimistic about just buying upfront like we're doing. 1 and 2, 3. We're still going to be seeing a 4 and a 5. We don't really care about the 4 and 5 at this point. We only care about the 3. So there is a 1 and a 2, then there's internal 1 and a 2. 5 swings into 3. 4, dot 1, dot 2, dot 3, dot 4, dot 5. Immediate target, 23,300. Now, we want to be very efficient, very precise. We don't want to hope that we get 23,500, 23,520. We can get this next week, maybe. We can get this, maybe we can get it in the current run-up. But the probabilities are very poor, not strong. But 23,350 is a confluence of advancing cycle. It's a confluence of the higher degree cycle 3 moving higher and the internal cycle dot 3 moving higher. So we'll definitely should 100% be seen. So you load up, take it to 23,300, 23,320. Effective. You get to acquire the money, hopefully, and add it to your equity. If we go higher, it is not a confluence of cycles. It is dot 3 is finished, we get to dot 4 to take us down into this high degree 3. So we do not go to 23,500. We run down again to 23,200, maybe. And we're holding the trade with little profit, and we are saddened because we are so lot of good money and that evaporated on a downswing. And 4 can be an A, B, and a C, of course. Will take time. We'll waste the rest of the week. And by the time we get 5, it is the end of the week, and we cannot tell the trade going into next week. We all know the story now. So the best is to go for only 23,300, 23,320. Take profit. Stand down, buy into a 4. Even if you see the market go higher. Yes, sir. Even if you see the market go higher. We will bite our nails, but better to secure profits at the beginning of the week. Retraction will mean we are able to redo the entry in 4 and take it back to 23,500. Bear with us a second. Right, so this is what we're buying into. Now we understand you're actually seeing a triangle out of the triangle. That's why we have to be very confident in what we're going to do. So there is this dotted green line, upper boundary of an ascending triangle, and there's this lower slanting line, lower boundary of an ascending triangle. You have another triangular fractal here. Sorry, really we do. So this, if I join this, I'm seeing another triangular fracture. If I join this, another triangular fracture. So the market is moving in fractals, small fractals. Right, this is a breakout. Excellent. Look at the labels, the 1 and the 2. We're going to that 3. That 3 at this point, I've done a 3, but it may be added up on a higher degree, maybe 45 minutes, as there's a 1 and a 2, dot 1, dot 2. And we're getting a good 3. It's still a dot 3. So that dot 1 can rise here. That dot 2 falls back here. We have a 1 and a 2, 3, 4, and 5. Best entry right now. We do not have to wait. Best entry, hedge. Hedge here comes in at 23,050, just like we're doing almost. At this point, of course, we had an earlier entry, 23,136. Right now, we do the market entry, 23,160, whatever we get. And the hedge is 23,060, 100 points of risk. 23,300 target. 23,286 is 23,300. It's resistance 3 on the 15 minutes. What kind of a resistance is it on the 45 minutes? 23,375 is midway between resistance 1 and resistance 2. We just go for 38.2% between resistance 1 and resistance 2. We get 23,320. Here it's 23,274. All right. I believe we just move on. We've already done the trade, so very good that we've done the trade. Excellent. Let's now check Bitcoin to see if you see breakout. Everybody wants to go to 23,500. I know the feeling. Yes, sir. Everybody wants to go to 23,500. But really, your degree of success of how it is measured by how much money you've made by the end of the week. So if you have made consistent profit factor of a specific percentage every week, you're a very successful trader. If you made very good money 1 week and then nothing else for the rest of the month, not a very successful trader. Everybody gets the point. The breakout higher will diminish the time of holding the trade, which is enough. It's very good. We'll close our trading day earlier, but we'll still go to 23,320. Stand down, wait for the retraction. Take it, of course, to 5 minutes. Take it to 3 minutes. Buy negative momentum next time, and we're good. We will still be doing the entry on a smaller scale to the next internal resistance. Today, that's us, of course. If anybody wishes to take it higher, they're more than, of course, it's the absolute right. They're more than free to do this. Our bias is to just go for short-term target projections.